welcome to another episode of 90-Second Equities. With me, your host, Matt Roberts, investment specialist here at Aviva Investors. Delighted this week to be joined by Richard Saldanha, lead portfolio manager on our global equity income strategy. Richard, I've got a particularly topical question for you this week as an income manager. Mega cap tech names Meta and Salesforce have recently announced dividend payments to investors. Why is this so significant? And could we expect others to follow suit?
Thanks, Matt. So those dividend announcements from Meta and Salesforce certainly caught people's attention. Meta's stock increased by over 20% on the day of the announcement, boosted by a large share buyback at the same time, which resulted in a bumper capital return for shareholders overall. In general, we think companies announcing dividends is a positive sign for investors, as it's a firm commitment to shareholders and also highlights the confidence in long-term cash generation to support future dividend payments. However, we should say large tech companies paying dividends is not a new phenomenon by any means. Indeed, we have seen quite a sea change over the past few decades in capital allocation priorities. If you went back to 2003 and looked at the S&P Tech Index, only 20% of companies back then actually paid a dividend. Fast forward to today, and that number is well over 50%, set to rise even further. Now, we think this is a game changer for income funds in particular. It means you can find dividend-paying companies in the sector that are benefiting from some of the long-term growth themes that we believe are driving the market. For example, generative AI, cloud computing, or digital payments, just to name a few. Whilst the dividend yields themselves for Meta and Salesforce aren't particularly high, at around 0.5% per year, there are lots of other examples of tech companies that do pay reasonable yields and importantly have an excellent track record of dividend growth. So we can see plenty of opportunity here.
That's a really compelling response, Rich, and I know it's sort of something that you're keeping a really close eye on at the moment. So thanks for coming on. Thank you all for watching, and please join us again in 2 weeks' time for another episode of 90 Second Equities. Bye-bye.